Hey, everybody, welcome back to another beautiful day in real estate. Today, we're going to have a good time talking about the war in Iran, how things are changing, and what to expect. So, before we do that, let's talk about interest rates. And interest rates are looking good this morning. We actually saw a pretty decent drop this morning right away at market open. Interest rates are below the 5.9 for the FHA on average, VAs at 5.9 and 6.3 for the conventional. Now, I know this is still a little bit higher than we initially have seen in the last few months. However, it's starting to look optimistic, hopeful, good news along the board right now, which leads us to our next topic, which is oil prices, because we always talk about oil because it directly correlates to the 10-year bond, which directly correlates to mortgage rates. Now, we woke up this morning, and before market open, or right at market open, we saw oil actually go below our most recent support of about $92 a barrel. This is WTI crude oil, by the way, versus the US dollar, excuse me. And then we saw it kind of fall between that bottom support, which we had a support kind of between $92 and $88 a barrel. It's kind of holding below right now. If we see this, if we saw it close today, my guess is tomorrow we would see it continue going down, which we don't have much support all the way down to $77 a barrel, which is going to be the most recent top before this. So we have, I mean, I guess we could hypothetically say between 80 and 75 is where we're going to find some support. But anyhow, oopsies, that's not what I wanted. All right. Anyway, we'll get to that later. But right now, that opening made us look really good. That's why interest rates started dropping this morning, right? Because why? Well, what happened was Trump announces he's permanently opening the Strait of Hormuz. So about 30% of the United States, 30% of the world's oil actually travels through the Strait of Hormuz, and it's been locked up since the beginning of the war, which was the beginning of March. February 28th is when everything kind of came together, where they started attacking each other, and well, now here we are. So we actually saw bond prices go up this morning. We've been talking about bond prices for a couple of weeks, and bond prices are now kind of hitting that resistance at 4.27, right? So I mean, again, these lines are subject to move slightly, right? I mean, if we really want to be particular about them, I mean, hypothetically, we can go that 4.28 range before we go down again. But it opened this morning, and we saw a bit of an increase. I mean, that's a pretty solid candle because we opened at 4.24 and we're already up to 4.28. Granted, we're only an hour into the market open, but you guys, this means that something is coming right now and people are selling their bonds, which means they're scared of what the next outcome is going to be. But I will say I am pretty optimistic again for interest rates because, well, most recently Trump came out and he said that he was going to fire Jerome Powell if he doesn't want to leave at the beginning of May. We'll watch this quick little minute video and then we'll discuss it here.
25 times more than that I would have done for 25 million. That's going to cost maybe $4 billion. Don't you think we have to find out what happened there? You know, we have other jobs like that, like the railroad in California, where it's, 25 times more than it was originally going to cost. And I think they're going to end up abandoning it. Okay, that's Gavin Newsom, or as I call him, Gavin Newsom, who's so bad. But that's the one. But I think the Federal Reserve building is just as bad. And so whether it's incompetence, corruption, or both, I think you have to find out. I really do. I think you have to find out.
So you're not going to drop the probe?
No, I'm not playing. I have to find out.
And he said he's not leaving if,
Well, then I'll have to fire him, okay? If he's not leaving on time, I've held back firing him. I've wanted to fire him, but I hate to be controversial, I want to be uncontroversial. But
and you think Kevin Warsh can get confirmed? You think Tom Tillis is going to give you a vote?
Well, we're going to have to find out. He might not, but that's why Tom Tillis is no longer a senator.
Dude, it's just getting more and more wild by the day. Anyways, so long story short, what we should have been looking at is he's talking about firing Jerome Powell if he doesn't leave at the beginning of May, which basically what happened was Jerome Powell said that if they don't confirm Kevin Warsh in the beginning of May, he said he will stick around as the head president for the Federal Reserve. And that just means that we are going to still be in a bearish mentality. I shouldn't say that. I mean, I will say that Jerome Powell gets a lot of heat, but he does play the market to maybe a little too conservatively, but he's playing it conservatively is what he's doing. So if Kevin Warsh if Kevin Warsh essentially gets approved by the Senate, Then he will move in at the beginning of May, which is going to be talks where Trump keeps saying he's confident that Kevin's going to get interest rates to drop, which really doesn't make any sense because we talk about Kevin Warsh from the early 2008 timeframe. he voted to raise interest rates in one of the worst times in financial history. Um, so I don't really know. At first I was optimistic. Now I'm just kind of like, there's so much shit going on that it doesn't even make sense to, it doesn't even make sense to guess what's going on. It's just kind of going with the flow. But my point is that interest rates are getting talked about again, and how can we drop them? How can we make it make sense, right? So anyhow, next thing we're going to continue on, you guys, is the Strait of Hormuz and the war in Iran. So you guys, Claude's my new favorite thing, by the way. Anyways, long story short, I looked at, what the issue was, what can we expect, and this is what it fed me. The direct line to mortgage rates and housing. Well, when the U.S. Israeli military campaign began in late February, mortgage rates are at below 6%. Lowest since 22. Within 2 weeks, they were back to 6.1 to 6.19, wiping out months of progress and affordability. The mechanism: oil prices rose dramatically. This is why it happened. When oil prices rose dramatically, inflation fears came, which caused investors to sell bonds. When that happened, Treasury yields increased, climbing from 3.96 to 4.25 in March, and then up to 4.46, the highest since July of 25. So the 30-year mortgage climbed to about 6.38. Now we're at 6.31. So again, we're moving down a little bit. But as of right now, the whole point is, here's what we can expect, right? If the deal holds, oil falls, inflation fears ease, treasuries rally, which means yields will go down, which means we'll see more money moving in because there's not such a concern about inflation. Mortgage rates could slide back toward the high fives relatively quickly, which I think that's what this is, an optimism portion, right? So people are thinking there's going to be a resolution, because they said that JD Vance was talking about coming back next week to have another negotiation period, and they're optimistic about it. It sounds like they're essentially going to try and strong arm Iran into giving them what they want. I don't think that's going to work necessarily, but then again, that's why I'm not the person in the White House or in the Senate. So anyways, and if the ceasefire collapses in the pessimistic scenario, the Strait remains disrupted. Oil holds above $100 a barrel, which, I mean, we're at 88, so that means we'd have to go and hit another 10% run, which is going to cause interest rates to go up, which is going to cause mortgage rates to go up, which is going to cause less people to want to buy homes this summer. Energy and commodity markets are likely going to remain structurally higher floor. So energy was up about 21% over the last month to month, which means what? When energy's up, means that electricity costs more. It means that oil costs more. It means that gas costs more. So until this kind of changes, that's there. It's just stating that we're basically going to have to expect to stay where we're sitting, right? So everything's kind of up in the air, but when you wake up to something like this, it shows there's a little bit more optimism in the market. A lot more people are starting to feel like things might be coming closer to an end. And if people kind of forgot about it, but there's still a war going on in Russia and the Ukraine right now. I don't know how many people have been paying attention. I know on my social media, I haven't seen much about it. It's dying down pretty significantly, and they actually did a 1 week or some weird number ceasefire for a holiday. To me, that just makes me feel like we're in a movie. I mean, they stop an entire war so that everybody can go have dinner with their families so they can go back to killing each other. That makes zero sense. But that's why, again, I'm only doing what I'm doing here. But so a couple of things. These are not really pertaining to what we just talked about, but they are housing market related. So it was kind of an interesting thing I came across this morning, which was that new homes are now selling below existing homes, and builders are spending up to $50,000 per house to buy down mortgage rates, saying pay attention. This John Brooks is very optimistic, and I say optimistic. He is expecting a 2008 crash, and I understand where he's coming from in a lot of perspectives, but I just don't see it. But this is a real thing right now. This is why I tell people that buying real estate right now is the way to go, because if you buy with a builder, not only are you getting a warranty filled home, so everything's under warranty, brand new product, you have a 1-year 1 year walkthrough with most builders that are in the National Association of Home Builders, and you can get your closing costs covered. You can get buy downs, all this fun stuff. I worked with somebody the other day. They went and bought a house on the secondary market. The house is 20 years old, less incentives, less square footage. But so to me, it just doesn't make sense. As a new home construction specialist, you guys, I don't understand why people are buying secondary homes right now when you could build for a lot less. I shouldn't say a lot less, but less, right? And even if you pay $20,000 more, you're paying half of the interest for homeowners insurance, or half the insurance pricing for homeowners insurance yearly. Your warranties are in there. You get to pick everything else in the home. I mean, in a market right now, I have somebody who needs to be in a specific school district. There is 2 houses that fit their criteria in that district right now. 2 of them, and they're both above the budget that they wanted them to be at. But right now, that's the most important thing to them, is making sure that their daughter is in that school district. And again, it's just one of those things where I always encourage people, you guys, there's nothing, let's build it. There's lots available everywhere, especially in this neighborhood for that particular person. Why don't we just build you a house? That's kind of where we're at right now. I think everybody's getting I'm getting excited. I mean, the market's warming up fast for me. I mean, like right after Easter is usually when everything starts to kick off. We got another offer accepted today. We accepted an offer on the weekend, which led to another one going into play. We signed another new construction yesterday, and we should be writing an offer on a house here in the next day or so. So we're going to get back up to our goal, which was 69 closings this year. And right now, I think we're at 9. So yeah, we got a little bit to go yet, but that's not the end of the world. We'll keep going. So next thing, used housing market. So again, is weakening heading into the spring selling season. This right here is a national average. So again, the thing is when we pull data, it's important for us to pay attention. The reason I bring this one up today is because a lot of us are going to see these headlines and we're going to say, oh, the housing market's going to crash. We should jump ship. Again, so we'll just talk on it. We'll go through it. So existing homes fell from 3.6% month over month to a seasonal adjusted rate of 3.98 million, the lowest since June of 2025. So notice how literally this is the lowest since last year. It's not pulling data from 2008. This is not the lowest since 2008. But okay, anyway, so this marks the second largest decline since November of 2022. Sales in the Northeast felt the lowest record, going to 99, while the Midwest matched the worst reading since 2011. The decline occurred before the recent jump in mortgage rates caused by the Iranian war, suggesting further weakness ahead. As a result, National Association of Realtors lowered its 2026 existing home sales forecast by to +4% from +14 previously. Affordability remains a primary concern. So what they're talking about here is they're saying that there's less homes on the market, less transactions on the market. So again, yes, there's less transactions happening right now, but there's also a ton less inventory. There's this document coming out, or this chart says there's 600,000 different or more sellers than buyers right now. And in some markets, that's very true. The Austin market, the Florida market, the California market, the New York market, it's brutal right now. It is brutal in those markets. People are still buying, but it's not cheesy. It's not good. So what we're expecting is we're going to see a ginormous financial crisis. But the thing is, you guys, is we're already in the downward negative times. Everybody's waiting for like this morning where they're going to wake up and things are going to fall off a cliff. And I just don't see how that makes any sense. Yes, I get it that things aren't looking beautiful, but they're not looking beautiful. And here's where we're at. Like, I mean, we're kind of in the mix of things right now. And a lot of us, I get it. Like, I totally understand where people are concerned. I do, because you're looking at news, you're looking at headlines. We all spend all our time on social media and we're like, wow, they're telling me that the world's ending. Okay. The world's probably ending. Well, not necessarily, right? It just means that, and the whole reason I bring all this stuff up is because right now, you guys, is the time to be buying real estate. I said it in my video earlier today, that will be on all of my socials, but we talked a little bit about the Strait of Hormuz, oil pricing, and that sort of thing. And right now, I still think it's going to be the best time to buy a house. We're moving into the spring market, so people are starting to put more homes on the market, right? We're seeing interest rates. Again, a lot of people, most people, I would say probably 70% are doing FHA unless they've owned a house before, right? So FHAs are under 6 on average, depending on who you're going through. And then on top of that, excuse me, tired today. On top of that, now you have the opportunity to get into a home where out of those 2 scenarios, right? The ceasefire continues and the war ends, right? Interest rates go down, your valuation goes up even more. Cheers. Or you get into a house, the ceasefire collapses, the negotiations collapse, and we're back to war, and then prices go back up, which tries to scare for inflation, which does what? Makes things cost more, right? So right now is kind of that lull period where you can get into a home and I'm not going to say you can't lose, because it's deal specific, but you have a better opportunity now to get into a home where you're going to actually gain equity than you would have a year ago. And even in North Dakota, I'm going to keep bringing it up, 6.6% in Bismarck on average for returns for your house. Big stuff. Like, that's good things to see. That's good stuff to see in this market. So I'm going to encourage everybody, if you guys are looking to get into a house, now's the time. Reach out to me directly if you want me to go over anything in your city. I will do a deep dive into each city to tell you where the data is, what I would expect, what my hopes are, what market looks to be the juiciest, whatever it makes sense. Make sure to like and subscribe for more videos, and we will see you tomorrow after we know more.